everyone, welcome to Charts in Perspective, where we use charts to dive into the world of economics and financial markets. I'm Jennifer Nash, an economic and market research analyst for TMX Verify. Today we're asking a crucial question. Is the stock market setting itself up for a major correction? When we look at one crucial metric, margin debt, the answer points to a massive historic level of speculation. Margin debt represents the funds investors borrow from brokers to purchase securities. While this strategy can amplify gains, it equally intensifies losses, potentially triggering margin calls if stocks decline. This first chart shows the FINRA margin debt and the S&P 500 since 1997. Margin debt reached a new all-time high in October 2025. Historically, major margin debt peaks have closely preceded or coincided with significant market downturns, notably around the tech bubble peak in 2000 and the financial crisis peak in 2007. Currently, the debt level stands at $1.18 trillion, up 5.1% from September. This marks the sixth straight monthly increase for the debt level and the fifth consecutive record high. But is record high margin debt a red flag? Typically, a high level of margin debt might suggest that investors are feeling optimistic and are willing to take on more risk to increase potential returns. However, it can also be a warning sign because it means there's more leverage in the market, and if the market takes a turn for the worse, it could lead to more frequent and more severe margin calls. Now, let's look at the same data inverted, making it a bit easier to see the relationship between the two series. Because this chart is flipped, when the purple line, margin debt, drops sharply, moving toward the bottom of the chart, it signals a massive increase in leverage as investors are borrowing aggressively and the two lines diverge. Conversely, when the line shoots upwards, that is the period of deleverage or forced selling, and the two lines converge. Our current debt level, shown here to the far right, is historically elevated, just above the 2021 peak, indicating massive risk-taking is back. This next chart highlights the real growth of both the S&P 500 and margin debt. It's clear to see that the growth among the two has always moved in similar patterns, albeit not similar rates. Margin debt has grown at an incredible pace, reaching 460% growth since 1997, easily outpacing the market's growth of 325%. When the debt growth line peaks this dramatically above the index growth, it's a historic signal of excessive speculation and extreme investor risk appetite. This next view is investor credit, calculated by adding free credit cash accounts and credit balances in margin accounts, and then subtracting margin debt. The red area shows negative credit balance, meaning investors owe more than they have in cash. The current level sits at a record-breaking negative $790.4 billion. This explosion of negative credit balance since 2018, far surpassing previous bubble levels, is a textbook definition of excessive leverage. Flipping this chart shows the negative credit balance in its most stark form and allows us to see the relationship between investor credit and the market more easily. When the red area peaks, it means debt is highest. The current record level on the far right is an extreme outlier, signaling a dangerous level of leverage underneath the market's rise. Now, margin debt isn't a perfect predictor, but it's still an interesting indicator to watch, as it can offer insights into the collective risk appetite and overall sentiment of advisors. With that said, the data is several weeks old when published, so major shifts are not immediately visible. But the key takeaway from the latest data is that margin debt recorded its fifth straight record high in October, suggesting an unparalleled level of risk-taking in the current stock market environment. That's all for our discussion. Thank you for tuning in. For more economic and market insights, you can find my content regularly on the Advisor Perspectives website under the AP Chart section.